depending on the time you're going to be watching this video. It's Dee SM here. Alright, so this is the continuation of our series that we started last 3 weeks. Last 3 weeks. Alright, so we are basically teaching my strategy, my 3D system for free on YouTube. Alright, so we have talked about basic market structure, we have talked about advanced market structure, we have talked about liquidity, and now we are coming into introduction to key levels. Alright, so this key level is going to be two class. It's going to be in 2 videos. First of all, this introduction, I'm going to be introducing you to key levels. What are key levels, the different types of key levels, how to use this key level as entries, and why the next video we are going to be diving deeper, how to know when a key level is going to hold, how to know an invalidated key level, if it can still be used again. Alright, so this is not what we're going to be talking in this particular video. I'm just going to be introducing you into key levels. Alright, so you know my system that I trade is market structure, liquidity, and key level. So we are now in the key level part of it. Alright, so we are just going to be diving into it quickly. Alright, so key levels, as we all know, there are point or areas that we want price to that causes price to move, or where price reacts from. A lot of people can call it, you can call yours, like people call them sometimes point of interest, call them key levels and all those kind of things. Like it's a point in price that turns, it's a point in price that acts as a turning point. You get what I'm saying? That's as a turning point for price. Alright, so introduction to key levels. We have 3 types of key levels when it comes to SLK. We have 3 types of key levels. Number 1 is that we have the A-shaped key level, a key level that looks like an A, and we have the V-shaped key level, a key level that looks like a V, and we have the open close key level. These key levels all have their uses. You have what we use them for. The same way you have order block, you have fair value gap, you have breaker block. That's how they are too. So an A-shaped key level has its own use, a V-shaped key level has its own use, an open close key level has its own use, and they can be applied to different markets, different price action at the same time. Alright, so let's just go into it. Alright, so I said an A-shaped key level is used for buys. An A-shaped key level is used for buys. I'm still going to explain deep into it, at least to a measure, this in this particular video. Why the next video we are going to be diving deep. Alright, so a V-shaped key level is used for buys. That's what a V-shaped key level is used for. Basically, it is basically used for buys. While we have the A-shaped key level, an A-shaped key level is basically used for sales. Then we have the open close key level. An open close key level is divided into 2. We have the bullish open close that is used for buys, and we have the bearish open close that is used for sell. Alright, so I'm gonna still be showing you in our next video. We'll be talking on if a key level is disrespected, how you can still use that particular key level to trade price to the opposite direction or in that same direction again. And I'll also be talking to you guys about how to know a valid key level and a key level that is not valid, and how to turn an invalid key level to a valid key level. You get what I'm saying? So trust me, that is going to be amazing. So this class is just going to be the introduction to it. Alright, so an A-shaped, V-shaped key level is used for buys. That's what we said, right? A V-shaped key level is used for buys. Why is it called a V shape? When you are looking at it, it looks like a V. That's what it looks like. It looks like a V. It looks like a V. Sorry, let me remove this. It looks like a V. Alright, so this is it. This is a V-shaped key level. Why does it look like a why do we call it a V-shaped key level? Is because it looks like a V. And what forms a key level is just two particular candles, just two candles, a bullish candle, sorry, a bearish candle and a bullish candle. That's what forms a V-shaped key level. Sorry, that's what forms a V-shaped key level. Don't mind my drawing though. That's what forms a V-shaped key level. Alright, below these particular lobes, below this candle is the V-shaped key level. It's a V-shaped key level. So meaning that we are expecting price to just come back into that key level, and then we use it for entry to the opposite direction. Can you get me? We use it for entry to the opposite direction. That's what a V-shaped key level is used for. Meaning that, let's say for example, prices. Let me remove all these stones. Let's say for an example, price is coming down. This is the V-shaped key level that we are waiting for price to come. Price is coming in a trend-like form, and price taps into that key level. What do we expect? We expect price to push from this particular key level to clear this external range liquidity. I'm still trying to inculcate it with the liquidity that we spoke about right now. So if you watch the liquidity video, I told you guys that this is what we call the trend line liquidity. This is what we call the trend line liquidity. It can also have external range liquidity. That's basically two types of liquidity that we have. Alright, so it can also serve as liquidity, external range liquidity. So price comes into that key level, we expect that key level to push price to expand to take out the external range liquidity. Alright, so that's basically what we use the V-shaped key level for. Why the A-shaped key level is still the A-shaped key level is used for sales. The A-shaped key level is used for sales. This is how it looks like. It looks like an A. It looks like an A. So meaning that we are expecting price to be coming down, or sorry, trading upwards, and then comes into this key level. We expect price to retrace. Alright, so you sell from an A-shaped key level and you buy from a V-shaped key level. Basically, that's why I'm using the word basically, in a basic form. That's how they works. I'm still going to be showing you, not this video now, the next video that will be coming next week. I'm still going to be showing you how to know if this particular key level will hold or not. How to know if it will hold or it will not hold. Alright, so expecting price to come into the key level, an A-shaped key level, and then we expect price to sell, expand, meaning that price is taking this particular loss. Price is taking this particular loss, and then price comes to take out the trend line liquidity. External range liquidity is gone. Then price just expand. Alright, so then we have the open close. The open close key level is kind of a different from these particular two types of key levels that we spoke about. Alright, so let me look for a diagram. Let me just draw a diagram of it out. Sorry. Can I clear these drawings? Let me clear it. Remove all drawings. Alright, so an open close key level is the open and close of two consecutive candles. Let's say price is in an uptrend, that we have a bullish candle, and then we have another bullish candle. I said it is the open and close of two consecutive candles. This bullish candle opened from this particular low and closed here, and then this next one opens from here and close here. Now in between of these two candles is what we call our bullish open close. That's what we call our bullish open close key level. So meaning that for a bullish open close key level, as the name implies, basically is used for buys. Just waiting price to come back into that key level, and then we'll use it for buys. Same also for the other type of key level, the open close key level, a bearish open close. Still two consecutive bearish candles. Let me change the color to red. The open and close of two consecutive bearish candles, what we call the bearish open close. The bearish open close, just like the name implies, we're expecting price to just retrace back into that level, and then price starts selling. Retrace back, then price starts selling. I would have loved to give you an expo here, but I don't want this video to be long. This is, what's the time? Time is 12:51 a.m. I have a lot of study to do. Alright, so now look at this. Let me just share it with you. Now a key level is, this key level is supposed to be used for sales, right? Coming into this key level and then we sell. But look at this. If price breaks this particular key level with an impulsive candle, let me use it. Let me use candle. In fact, let me use candle. Let's say a bullish candle is coming and then it fails to close below it, broke above it like this. This particular key level is still valid. It's still valid, but price will now use it to push price in the opposite direction. I will show you chart example one when we get to when I'm doing the next video on key levels. I'm going to explain deeply to this. I'm just trying to show you what you should expect next week. Alright, so we can now use this key level to push price in the opposite direction. If price break above it with a full body candle, you can call it a break of structure or a breakout. Then why for a bullish open close, meaning that we are expecting price to come into this key level and buy, then price now creates a bearish candle that closed below this level with an impulsive move, then it means that this particular key level is still valid, but it will now be used to push price in the opposite direction. When a key level is violated, when a key level is disrespected, that key level is still valid, but it will now be used to push price to the opposite direction. You have heard of those things, that there's this thing that people say like support turned to resistance, meaning that if a support is broken, that support is still valid, but it will now be used as a resistance to push price downward, because price is expected to buy from a support and sell from a resistance. Also if a resistance is broken, you can now use that resistance to push price upward. You get what I'm saying? Alright, so the same thing implies here. This is not our study for today. I'm just trying to introduce you to something. Let me remove this. Also, this is our V-shaped key level. V-shaped key level is supposed to be used for buys. Are you getting me? It's used for buy, meaning we are expecting price to come into a V-shaped key level and buy. But when price breaks a key level with an impulsive move and close below, we are now waiting to use this key level. Is still valid, but it will now be used to push price downward. So also for a bearish scenario, let me just change this thing. So also for a bearish scenario, is this. a bearish scenario. Let me check this to a bearish candle, and then let's put this to a bullish candle, and then bullish candle. So an A-shaped key level is used for buy. It's used for sell. Sorry, an A-shaped key level is used for sell, meaning that we're expecting price to come into an A-shaped key level and then sell. That's what an A-shaped key level is used for. But when it is broken with an impulsive move, price closed above that key level, is the key level is still valid, but it will now be used to push price in the opposite direction. It will now be used to push price in the opposite direction. Don't forget that I'm just introducing you to this thing. This is not, it's going to be in the next video that we'll talk on this. And it's not this particular video. So let me just show you chart examples of what I'm talking about. Let me go to the charts. So this is XAUSD. Coming. How you know a V-shaped key level and a V-shaped key level is when you use line chart. If you go to the line chart, looking at this zone, because I'm already used to trading key levels, I can show to you that, oh, this is an A-shaped key level. This is an A-shaped key level. This is an A-shaped key level. This is an A-shaped key level also. This high. It's an A-shaped key level also. If you go to the line chart, that's where you will see it. What can you see? Look at those highs that looks like A. All of them looks like A. So that's what an A-shaped key level is for. And what do you see that price did? Price just came into the A-shaped key level, and what did price do? Price sold. Here also price came into this particular A-shaped key level, and what did price do? Price sold. Meaning that basically an A-shaped key level is used for sell. An A-shaped key level is used for sell, meaning that as price is coming into that A-shaped key level, we are supposed to sell from here. This is the A-shaped key level, right? We are supposed to sell from here. Our stop loss will be above the high of that candle, and then what will be our take profit? Our take profit will just be like this. A-shaped key level. Let me look for real examples. Same thing happened here. Price, where did price reacted from? Price reacted from this particular A-shaped key level. Go to the line chart, you will see it. Can't you see that? Look at this sharp edge. This particular sharp edge. It's the A-shaped key level. That was where price reacted from. Boom. Price melted. That's what that's how an A-shaped key level is. Let me even look for a clean example. I'm looking for a clean one. A clean example to use, because you know why? See, in an uptrend, expect A-shaped key levels to be broken and expect V-shaped key levels to hold, because price is buying. Are you getting what I'm saying? A-shaped key level is used to sell, but price is in an uptrend, so you expect A-shape to be broken and V-shape to hold. Look at this. Price is clearly in an uptrend. What's this? This is an A-shaped key level. Go to the line chart. You can see the sharp edge. That's an A-shaped key level. And what the price did? Price sold from there and took out this liquidity. But because price is not downtrending, that's why we couldn't break below all these lows. We couldn't break below it because price is in an uptrend. That's why I say expect A-shaped key levels to be broken and V-shaped key levels to be hold. And what do you see? Price broke above it because we are in an uptrend. Price broke above it. Alright, so but look at the V-shaped key level. Look at all the V-shaped key level. This is the first one. First V-shaped key level. Price reacted from it, and what do you see? Expansion to the upside. What do you see here again? V-shaped key level. Go to the line chart and see. Can't you see them? A V-shaped key level, that was where price reacted from. From here, let's see. From here, stop loss will just be below this particular low, and then what will be the target? The target will be this high. From here, this is another entry. You know why we are paying attention to only the V-shaped key level? Because it's an uptrend. It's an uptrend. You are not expected to be looking for sales, in as much as there's going to be sales, but you are not expected to be looking for sales in an uptrend. And what is this? You target the same high, and what the price just did? Price just, and if you look at this is also an A-shaped key level, right? Price reacted from it, but price could not, it couldn't hold price because price is uptrending. Price is uptrending. Could not hold price because price is uptrending. That's two examples now. Even looking at this one, this particular low here is an A-shaped V-shaped key level. That was where price reacted from. So it's a V-shaped key level. Okay, look at this one. I'm still showing V-shape now, not open close. Look at this one. Look at this particular one that price reacted from. It's a V-shaped key level. Go to the line charts. A sharp edge V. And what the price did? Price just came back into that key level, and I think that was where this expansion started from. Yeah, this particular expansion, that was where it started from. That was where the expansion started from. Crazy price, right? You can just see from here, price just tapped into the key level, and then stop loss will just be below this low, and then what will be your target? Your target will be this high. Target will be this high. And what can you see? That was clearly where the expansion started from. In fact, if you understand directional bias, this will be where your target is. But currently gold is trading above 5k, so imagine this was where your target is. In as much as I know that you will not be able to hold the trade, but I'm just showing you something. Alright, so look at that, a V-shaped key level. That was where price reacted from. Look at this as well. I'm trying to show you all the V-shaped key levels here. Look at this as well, a V-shaped key level. That was where price still reacted from. Just scan your peers on and all. What's this again? A V-shaped key level for buys. Okay, now let's say now that price is now trendy, price trended downward, at least from a little, from here to here. Price traded downward, right? Now look at where price was reacting for, because now we are now in a bearish trend. And I told you that an A-shaped key level is used for sales. What's this? This is an A-shaped key level. That was where the main sale started from. Price started selling crazily. And what is this again? A-shaped key level for sales. Price started selling madly. Price started selling. What's this again? A-shaped key level. Price sold. So that's just basic. That's the basic of key level. Now there's another type of key level which we haven't talked about. We haven't shown chart example. Is what we call the open close key level. I want to show you also how that all this pair works. Like this thing works for all pairs. I think there was this particular good trade here. That this was it. This particular good trade was the one I did. Yeah, this was a V-shaped key level. Now that was where price reacted from. You can see this buy that went to, this particular buy that went to 5k. That was where it started from. An A-shaped key, a V-shaped key level. That was where it started from. That was exactly where it started from. Alright, so Now look, this is what I'm going to be explaining next week. You can see an A-shaped key level that was supposed to be used for sales, that was used for sales. Price broke it with an impulsive move. What did price? The price came back again. Used it for buys, and then price just continued. That's not what we are talking about. We are just introducing you into key levels. Alright, so now look at this. No, let me not use this example. Let me look. Okay, now we are now talking on open close. Open close key now reacts from an A-shaped key level or a V-shaped key level. You know, I told you that we have three types of key level. We have the A-shaped, the V-shaped key level, and the open close key level. Alright, so now the open close key level is divided into two. We have the bullish open close key level and the bearish open close key level, and I showed you that a bullish open close is basically used for buys, while a bearish open close, as the name implies, is basically used for sell until it is proven otherwise, which is what we are going to be talking in our next video when we are talking about key level part 2. Alright, so look at this now. I want to show you something. Let me go to the 2 hours time frame on gold. 2 hours time frame on gold. 2 hours time frame on gold. So let's start with the bullish open close. In a bullish market, we are expecting bullish open close to hold. We are expecting bullish open close to hold, while bearish open close to be broken. Expecting bearish open close to be broken. Look at this now. I said a bullish open close is the open and close between two consecutive bullish candles. What can you see? This was a bullish candle that broke this particular high. This was now a breakout. Then another bullish candle. This one broke this high again. In between of those two bullish candles, what we have is where we see the open close. And where the price reacted for? Price just came back into that key level and reacted and went. Price started buying heavily from that key level. Let me look for another example now. This is another example again. This is a bullish candle. This is another bullish candle. In between of those bullish candle, we have the bullish open close. In our next video, we're going to be talking about how to know which particular key level you are going to use, whether you are using the A-shaped key level, the V-shaped key level, and the open close key level. Yeah, so that's a bullish open close. That was where price reacted from, right? Okay, now let's look for another examples. Just trying to show you how key level works on the basic form. Yeah, on basic form. My god, I don't want to go far. Let's even use the correct price action. Correct price action for this one. Let's use it. Current price action. Okay, look at this. This is a bullish candle and another bullish candle. In between of those bullish candle, the bullish open close. Price came back, tap into that bullish open close, and price expanded. Price just expanded. Okay, price expanded. Looking at this again, this is another bullish candle and another bullish candle. In between of those candles, price expanded. What's this? This is a bearish open close. I told you, expect bearish open close to be broken in an uptrend and expect bullish open close to hold, because we are looking for buys. We are buying unless price wants to sell. Yes, we now if price wants to sell, we expect bullish to be broken while bearish to hold. All right, so I told you that we are going to be talking about this thing. What's the name? Like how to know a valid key level and an invalid key level, and how to make use of a disrespected key level. You get what I'm saying? Maybe I will just show you an example of what I'm saying. All right, so look at this again. A bullish open close, although price did not come back to this one, came very close, but it didn't came back to it. All right, so that's one. Then look at current price action, where gold is reacting from. Another bullish open close. That is where gold is currently reacting from. And if 1 hour give us what we want to see, let me go to the 1 hour. We expect gold to at least buy from there a little. buy from there a little. All right, so let's go back. So now let's look on bearish open close, examples of bearish open close live on the charts. Looking at this as well, this is a bearish open close because two consecutive bearish candle. The first candle broke structure from here. This particular candle followed the open and close of those candle. Bearish open close, that was where price reacted from and sold. Let me look for another example. We are looking for it in a bearish market. In a bearish market, that's where we are looking for it. Let me remove this. Looking for it in a bearish market. Okay, this is more like a range. Let me look for a bearish trend. Okay, look at this one. This is a bearish candle, and another bearish candle in between bearish open close. And you can see when price comes, let me go to the 2 hours time frame so that you see it clearly. You see now, this is what I'm saying. Can you see it? When price just comes into it, price just expand crazily. I was saying something in the group that when all time frame align, that is when expansion comes. If we decide to run a little study on what happened here, you are going to see how from daily to 4 hours to the 1 hour, everything was in alignment. That was why all this move was crazy. All right, so let's look for another bearish example. So your job now is to go and find them on the charts, mark them out, study them. Is one thing to learn. All right, look at this again. Look at this. This another bearish candle in between here. In as much as we can arguably say that price reacted from here, from this particular A-shaped key level, another person can be taking it from this A-shaped key level, while another person can be taking it from this open close. That's why we are not the same. We are different human beings. You get what I'm saying? Okay. For a bullish scenario, this one is for a bullish scenario. That one is for a bullish scenario. For a bearish scenario, bearish. I'm looking for a bearish trend. Gold has been trending upward for a long while. I'm looking for bearish open close. Well, let me go to the 4 hours. I think I'll find them, or daily self. Let's use daily. Coming to daily time frame, what was this? Bullish open close. Price reacted from it. That was where this long buy started from. That was where it started from. What of bearishness? Let me go back to previous price action and look for bearish scenario. And the truth is that it works on all time frames. Yeah, all time frames. It works on all time frame. It works on all time frame. Look at this one. Two consecutive bearish candle, first one, second one. In between of those bearish candle, price reacted from it. So in our next video, we are going to be talking on how to make use of a disrespected key level. Like I said before, a key level that was broken. I told you that an A-shaped key level is used for buys. It's used for sell until it is proven otherwise, or the price disrespect it. It's not that it's no longer valid, but we are now using it to take price to the opposite direction, and it depends on how many times price broke it and in which direction the price broke it to. Why a V-shaped key level the same thing, a bullish open close the same thing, a bearish open close the same thing. Look at what I'm trying to say. Let me just give you a tip test of what I'm trying to say. Look at this. An A-shaped key level is used for sales, right? Price came into it, sold a little, then price broke it with a body break. What did price did? Price just came back to that key level again and price continue in the opposite direction. That's it. All right, so peace.